Hello, and thank you for joining us today. Everybody can hear me fine, right? My name is David Rankin. I'm going to introduce you today to blockchain and crypto, understanding the future economy and introduction to crypto and the blockchain. Um, just to start us off, I'm going to throw something out there. What is the significance of blockchain? Good morning, Lynn. Most people have no clue when you start using the words blockchain, that other than they may have heard some BuzzFeed about it. As you can see, these are just some clippings for some articles. Walmart's going to be using blockchain along with IBM to track food. You have over here, China is actually using digital currency, which is on a blockchain, and they're experimenting with that. We're going to be hopefully catching up to them sometime soon. We have First America launches a blockchain system that was back in 2018. And you have the Office of Comp Controller. Interesting news, there was actually the chief legal officer of Coinbase, which we'll talk about later, which is a major crypto exchange, was actually picked up by the Federal Reserve. He is now the comp controller of currency, and he just recently said that banks will be able to be custodians of cryptocurrency. JP Morgan has been trying to do their own cryptocurrency and recently just sold it off to another company called Consensus, which is a fairly big company within the crypto space. So these are just some of the areas that, if you weren't familiar that blockchain is already being used out there, it is, and you can see that. We will go on to the next slide. Briefly, this is my quick disclosure statement. I pretty much use this whenever because we are dealing with financial instruments. This content is for informational and educational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained here constitutes a solicitation, recommendation, endorsement, or offer to buy or sell any securities or other financial instruments whatsoever by the author, presenter, and other associated parties for the content being provided. Please do your own due diligence and seek proper counsel. So, how common are cryptocurrencies around the world? We are seeing the biggest growth in areas that are experiencing hyperinflation, areas such as Argentina, Brazil, any country that has issues with their local currency. Africa, Nigeria actually has a big usage of cryptocurrency and Bitcoin, primarily because other countries don't trust their currency, and so they won't barter with them. So what they actually do is they'll actually use 70% of the Bitcoin that is purchased in Nigeria is actually used to buy things in China and imported for and used for commerce. So it is growing out there. Okay, a little bit of facts. Money was once backed by silver and gold. As you can see, this is a silver certificate on this dollar. It says $1 is in silver payable to the bearer on demand. This stopped quite a while ago. In 1913, the Federal Reserve Act, signed into law by President Woodrow Wilson, gave the 12 Federal Reserve banks the ability to print money to ensure economic stability. The Federal Reserve System created the dual mandate to maximize employment and keep inflows. On the chart on the left, you will see USD, the buying power of a $100 basket over time, basically in the effects of inflation on the dollar. So basically, on the very So on the very far left, you can see right here that you used to be able to buy $100 in that same basket of value over time as to what your purchasing power, basically, the effects on the dollar and the purchasing power. And if anybody has a question and wants to stop me and ask a question, feel free. Okay. Oh, I have a timer on these things. Okay, so we need to have some basic economic terms, just some simple understanding to understand the reasoning why cryptocurrencies were created. As you can see on the left, these are some different assets over time. Typically, investments do go up, but a lot of the reasons why they go up is actually because of inflation and actually the devaluing of the dollar, because we're in a debt-based system. You can see right here in 1933 was when gold was actually confiscated by Roosevelt, signing to an executive order 6102. Basically, he was requiring everybody to turn in gold so that they could get cash to then pay off government debts. We need to understand some economic terms here. Debasement. A debasement of coinage is a practice lowering the intrinsic value of coins, especially when used in connection with commodities such as money, such as in gold or silver. A coin is said to be debased if the quantity of the gold or silver, copper, or nickel in the coin is reduced. Your pennies are no longer fully copper like they used to be. There is actually zinc on the inside of your pennies. Silver coins, quarters used to be silver before 1964. They actually have copper in the middle of your quarters now, and you can actually tell by the edge of your quarter now. So just some examples of debasement there. You have inflation. Inflation is a general increase in the price and fall in the purchasing value of your money. Deflation, decrease in the general price level of goods and services or assets, such as equities or real estate. Then you have insolvency, the state of not having enough assets or being unable to pay the money owed on time. Three tools that the Federal Reserve has to control the monetary supply is the open market operations, buying and selling of securities, discount rate, the rate charged by the Fed on short-term loans, and the reserve requirement deposits on reserves. This is an interesting chart that I threw in just because I put this out there. A couple people I knew and they had some comments, so I added these in based off of those. This is the American paycheck. It says Americans' paychecks are bigger than 40 years ago, but the purchasing power has hardly bulged. So you can see on the yellow line that represents how pay is increased, but relatively in nominal terms, based off of the CPI and cost index. Basically, the purchasing power of our income hasn't really changed in the last 40 years. And then for real estate, here's some adjusted real estate. We can see on the far left, we have a nominal median, and then we have the real estate prices adjusted for inflation. Other than the two bumps that we saw back in the 2006 and recent increases, which is usually because of lower rates, you can see that housing actually stays fairly level, and it increases over time, but once you take out for inflation, it stays fairly level. What's interesting is if you actually look for it on the very far right, bottom right, you'll see price per square foot of new single-family homes has actually stayed level throughout the last however many decades it shows there, from 1978 to now. They say that the biggest change in real estate is actually we're seeing an increase in square footage, but the price per square foot is actually staying fairly level. Then also on the far right, you can see real monthly mortgage payment prices adjusted for inflation. So that kind of goes to the point that if you look at your assets, you're basically what you're doing is the advantage to buying a home, obviously, as most of us know, is if you can lock in today's prices, you get the benefit of having today's prices as it continues to move upwards with inflation. So some of the things back in was that I think it was like 2008, if I remember right, 2009. We had the 8 trillion. We had the big bailout in the Obama time with the housing crisis that was going on at the time. I made a little joke over here called "Government Games of Thin Ice." We have little boy representing Trump on the left, Pelosi on the right, Jerome spectating, and dropping stimulus into the economy from the Fed. It's things like this that are partially the cause of why Bitcoin was developed. And as you see here recently, on the little circle on the very far right, you'll see the start of the mass injection of the monetary supply that was partially a result of COVID. But really, some of the reasons why this was done is, as you can see, there's a gradual increase in the M2 money stock supply, which means they've actually been injecting money for a while. The reason is the bottom curve line you can see on a decrease there. We've actually been having a slowdown in the velocity of money. It's basically the circulation of money. So that gives I don't know, there's more to be said about that, which we can probably go in more detail. But basically, our economy has been slowing down. If you look at the baby boomer generation, we had the biggest growth cycle from the time the baby boomers hit their 30s to 40, or basically 25 to 40, which was in the 80s and 90s. We had major growth cycles in our economy because of that. Now that they're entering into retirement, they're starting to spend less and save more, which slows the economy down. And then in the background, I have Bitcoin, its price. Yeah, we'll move on. All right, just some examples of hyperinflation here. If you're trying to grasp what hyperinflation is or what inflation is, this is my little example I made. I have a $10 bill that can buy me 6 rolls of toilet paper. If you have a government that experiences hyperinflation and the value of your currency falls, your toilet paper ends up being $100 for 1 roll. We currently have issues in the United States, which many of us know are aware of. This is an app on here on the far right called the debt clock, national or U.S. debt clock. And it's interesting when you look at the U.S. debt clock because you can see the unfunded pension rates. You can see all of the liabilities that our country has, which are for some questions in regards to our long-term solvency. So one of the most are at a disadvantage when it comes to understanding financial markets. I threw up 2 articles in here because I thought this was interesting. First, I have Warren Buffett saying this article saying Warren Buffett isn't buying, but says that one stock market bet still makes sense. And then a couple months later, he says that Warren Buffett reaped $40 billion from giant Apple stake since March bottom. He actually had bought more. One of the concerns I have as an investor, because I have management portfolio, is on July 10th, 2020, the U.S. Securities and Exchange Commission released a proposal to raise the reporting requirements from 100 million to 3.5 billion, and limiting the exclusion of smaller positions. And what I'm referring to is when somebody like Warren Buffett, if they trade over $100 million in a transaction and buy a certain shares of stock, they're required to report that on what's called a 13F statement, where other companies can then, and other companies and investors can see what they bought or what they sold. Which gives some open, basically some disclosure as to what people are doing in the markets. They want to remove that and change that from being 100 million to 3.5 million. So stuff that big money movers, are doing are kind of hidden from the general public, which personally I'm not comfortable with that. And I think a lot of companies aren't comfortable with that because if somebody's doing trying to take a leveraged position in their company, they're going to want to know who's owning their shares. So there's definitely issues with that. As mentioned previously, baby boomers. The average, this is the median. So, when you look on an average level, it actually looks like baby boomers are doing fairly well. Unfortunately, that number is often skewed by the top 1%. When you look at the median baby boomer net worth, it's only 184,000. And they shows this is I'm a big fan of what this channel called Real Vision. It's on YouTube, and it's ran by he used to run a hedge fund. Anyways, his name is Raul Paul. Great guy, great information on there. Has a lot of different people interviewed on there, and it's really good information. But anyways, he brings up this article. He has this whole thing on the coming debt crisis because basically what happens is you have baby boomers who their median net worth is 184. Obviously, if we're in California, we're a little bit better off because we probably have a little bit more equity. But they have 4,000 in bonds, 45,000 in equities. Their 401k might be only 45,000. They have savings of 18,000. A pension maybe 44. They really don't have enough assets to retire off of at this point. So what there's some fear. There's they call it the silver tsunami. Some people talk about that we're going to possibly see a sell-off from those baby boomers who are entering retirement to either, they're either going to refinance or they're going to do a reverse mortgage to tap their equity, or they're going to have to sell off and downsize because they're going to have to find some way to fund their retirement. And it's been discussed for a long time that we don't know how long Social Security is going to last. So these are definitely concerns going on, which leads more into cryptocurrencies. All right. So first off, to understand a little bit about open source, you got to understand where we're coming from. You have to understand open source and online communities. There's a group of people out there there's the open source community, and it's basically a group of people that believe that code and programming and programs should be open source, that anybody should be able to use them. We have some very popular products out there. I think Mozilla is one of them. There's browsers. There's all sorts of different applications out there that are actually free for download. You can donate to them, and what it is, it's other programmers all working towards building this. COVID has actually been huge for the open source and crypto community because of the fact that most of us are techno nerds. We took advantage of this, and I literally meet with people all across the United States. On the top left, you'll see Cap City BTC. That is our local Bitcoin meetup group. I'm one of the leaders of that group. Discord is actually a chat channel for gaming, but crypto groups have taken control of that and also been doing a lot of that. Telegram is actually was actually, I believe, on a blockchain. Oh, back, sorry. And Telegram is used for communication. Obviously, Twitter. There's a lot of people using Twitter in the crypto space. Zoom conferences, we're using that. The important part is understanding basically that there's a huge network out there in the crypto community that's all sharing information right now. And a lot of that share of information is how crypto got started. So sometimes we don't understand the predicament that we're in, and it's better, but it's better than the alternative until we are presented with a better solution. So my little joke here is, little fish comes in and asks, how's the fishbowl? The other fish has never been outside the fishbowl, has no clue. If you're too early to the program, you jump out of the fishbowl, you die. It's not till there's another solution that comes up that we recognize opportunities and can take advantage of them. So we're entering what's called a paradigm shift, a fundamental change in the approach or underlying assumptions. Some questions to ask yourself is, who is the Fed? Most people don't realize the Fed is not a government entity. It's actually a private entity owned by member banks. What backs USD? Well, your dollar used to be backed by gold and silver. Now, really, it's only backed by faith and basically trust in our government and the fact that we have a military that's going to defend it, and that somebody's also going to take it. What do you really own? When it comes down to it, do you really own your money? No, a dollar is actually a debt note. It's a promissory note to pay you for something, for exchange. If you actually deposit your money into a bank, it's actually their money. You are lending them money, and that's why you get interest. It goes as a debt on their books. So there's a lot of questions as to what you really own. You pay off your house, you still pay taxes. So there's a lot of questions. What's interesting about crypto and Bitcoin is if you own it, you actually own it. So Bitcoin was actually developed in a community, open source community. And what's interesting is it's anonymous. The person who originally created it, named Satoshi Nakamoto, and that Satoshi Nakamoto is an anonymous person. Nobody actually knows who Satoshi Nakamoto is. And there's a lot of conspiracy behind that. He developed Bitcoin. Bitcoin became popular. And then this young prodigy kid named Vitalik Buterin decided that, hey, it'd be cool to do a little bit more with this. And he decided that, hey, is it possible to somehow write contracts or do programming with this? And he saw some limitations, so he actually developed another blockchain called Ethereum. Oh, man, sorry, it's racing ahead of me. Developed another one called Ethereum, and Ethereum allows for smart contracts, which I'll explain later. And both Bitcoin and Ethereum require actually a mining, which I can discuss a little bit in a minute. And they're trying right now, we're having a new movement from going from machines to social, or instead of actually using machines to mine this stuff, you will actually stake it on machines and be more of a social network than a machine network. I can describe that a little bit more. Anyways, so here, why cryptocurrency? Crypto is for the people, by the people. It's something you can actually own. It's a digital representation that you can control the asset. It was said by Thomas Jefferson, if American people ever allowed private banks to control the issue of their currency, first by inflation, then by deflation, the banks and corporations will grow up around them, will deprive the people of all their property until their children wake up homeless on the continent their fathers conquered. This is what we are seeing now. And some people might debate that, but that pretty much sums it up. What's interesting is when Bitcoin, this right here on the far left bottom is the first block of Bitcoin. Bitcoin is basically mined via a whole bunch of, it used to be mined by computers, and things got more complex because what happens is Bitcoin has an algorithm that allows one Bitcoin to come out every 10 minutes. The more people that are mining it, it changes the actual difficulty level. So that way it always comes out every 10 minutes. And so the more difficulty and the more people doing it, it increases the difficulty, which means then you need more power consumption and you need more computers. It used to be able to be really cheap to mine a Bitcoin from your own computer. There was other complications back then, but now it's gone so hard that it actually takes a whole server bank of specialized machines and $3,500 in energy costs or more to simply mine a Bitcoin. Let's go back. What's interesting is in the first, there was a note that was included in the first Bitcoin ever created that said the times of 03 January 2009, Chancellor on brink of the second bailout for the banks. That was by Satoshi. And then in honor of that, we just recently had a halving, which means we just reduced the supply that's actually coming out. They put another message saying 2.3 trillion injected, Fed plan far exceeds 2008, which was kind of a joke because the bailout that we just had right now beat our last bailout. All right, so a blockchain is a database, but a database is not a blockchain. On the left, you basically have your centralized database, the normal one that people are used to. A computer that you log in from your PC. That's more of a centralized database accessing through a server. In a blockchain, you're more of a peer-to-peer network on a decentralized network, which is a decentralized blockchain. This is an example on the right. Is an example of a mesh network. A blockchain is an immutable distributed ledger of a non-recursive record connected by pointers. So blocks are stored, a store of information validated by nodes that are cryptographically secured. Every block created contains a hash of the previous block. So as you can see in the bottom, we have this little chain. And so let's say the first transaction is 0, okay, and then another transaction is added. Well, the next transaction would be 1. Well, the previous transaction would point to the next. And then the next transaction would point to the next. Well, every time there's a new transaction added, the previous transactions can never be edited. Okay, so the need for trust. Why is Bitcoin so significant? It solved a problem called the Byzantine generals problem. The Byzantine generals problem is if you have a whole bunch of generals, which is shown on the left, and they go to attack the castle, if everybody is coordinated, the attack works well. Unfortunately, if you attack a castle and you have traitors within your midst, they can send false messages and your attack can fail. So what happens is they created basically blockchain, and the blockchain technology allows for fraudulent information to be basically backed out as long as 51% of the information is accurate. It achieves a consensus even with a false information. What use cases can this provide? Payments, identity, notary, title, escrow, loans, insurance, governments, a lot of different use cases. Counterfeit currency. According to the United States Department of Treasury, an estimated 70 million in counterfeit bills are in circulation, or approximately one note in counterfeit for every 10,000 in genuine currency, with an upper bound of 200 million counterfeit, or one counterfeit per 4,000 genuine notes. I put Black Lives Matter. George Floyd was being arrested for passing counterfeit currency, and I just made an interesting comment that this arrest would never have happened with cryptocurrency. You cannot counterfeit cryptocurrency. People have actually tried using cryptocurrency for crimes, and they're finding out that it really is not good because because of this chain that we discussed right here, you can actually go back through the chain and follow the transactions to actually find out where they're getting it from or where they're depositing it, and it makes for a whole mess for them. Little note at the bottom, there are only 21 million Bitcoin, but it's divisible into Satoshis, and there are 100 million Satoshis in one Bitcoin. So right now, Bitcoin is floating around the mid 11,000s. I forget off the top of my head. I could probably look it up on the phone. But a lot of people are concerned with, well, I can't afford to buy one Bitcoin. Well, it goes out to a million, almost like, yeah, I don't know how many decimal points that is out there, but there's a million Satoshis. So you can buy fractional amounts of Bitcoin. Bitcoin right now today on my phone is $11,511. but you can buy $10 you want, you can buy $100 you want. So it is divisible though. Most people don't realize that. So what is it? Asset or currency? No one really knows yet. The IRS wants to know how much you have. If this year was the first year on your tax returns that you had to claim whether you sold cryptocurrency because they wanted to tax it because they consider it property. But a recent federal court case deemed Bitcoin as money. Somebody was in a lawsuit for money laundering, and he was trying to get out of it by saying that it was not a currency. And because it's not a currency, he wasn't money laundering. And the judge deemed, no, Bitcoin is a currency. You were money laundering. Um, so because of that, it's going to throw back some issues to the IRS. Is it a currency or is it property? What is it? And so regulations is still trying to figure that out. I know JP Morgan Chase will probably be one of the first, be my guess. And it'll be interesting to see what happens, though. But it's still waiting for regulation. Getting into crypto. It is the best of times. It is the worst of times. You're late, but you're still early. It's about making money when the time. It's about making money with time in the market. But if you've lost money, it's really about the technology. And I joke about that. And I came up with that phrase because of the fact that anybody who typically gets in cryptocurrency when they first get started, this is a chart of Bitcoin. Anybody who typically gets started in Bitcoin ends up losing money because it goes up and down so much because of volatility. Hopefully, as it reaches mass adoption, the volatility will be less. It's a volatile asset. And there's probably much more that can be said on that. Crypto exchanges. These are some examples of some crypto exchanges. Coinbase is a fairly popular one, along with Binance US and Kraken. And typically, so what happens? I'll go back on this so I can explain why I have this. On the left, I have Coinbase. If you were to buy, you can download an app on your phone and literally buy cryptocurrencies through your app on your phone through Coinbase. Typically, Coinbase actually charges. They do basically do market orders. If you're familiar with what a market order is, so basically you're going to end up potentially paying a higher price than maybe what the current price is, plus their fees are slightly higher. Coinbase on my next screen is actually, this is Coinbase Pro, which is the Pro app, where if you actually convert your funds into this program, you can actually do what's called setting a limit order. I show on the very far left is a market, and then the one just on the right shows a limit order, and then you can set limit orders. And I think on the screen it says it looks like I bought 0.25 on this chart of a Bitcoin, and it was at the time when I bought it was 9,125, and the fee was $7.98. So that was probably, I don't know, like 1,000 or two. All right, so that's a centralized exchange. Next, we have Ethereum. I was mentioning this is Vitalik Buterin. He came up with the idea of being able to do smart contracts. So basically, you think of a legal contract, and basically, it's a legal contract in a code, which allows you to do a whole bunch. I would just throw up a little example here of a little, sample bank application. You have the code for depositing money, for withdrawing money, and checking a balance. A smart contract is a computer program or a transactional protocol residing on a decentralized blockchain network, which is intended to automatically execute, control, or document the legally relevant actions and events according to the terms of the contract or an agreement written into the lines of code. Sorry. There's a couple different protocols out there. There's a ERC-721 NFT is a unique non-fungible token created on the Ethereum blockchain using a free open standard. And then there's an ERC-20 token, is a token created from a technical standard used for small contracts on the Ethereum blockchain for token implementation. As of April 16, 2019, there were more than 181,000 ERC compatible tokens, and I will explain what those are in a little bit more in a minute. Smart contracts allow things like this. Uniswap right here is a decentralized exchange, a DEX. And basically, as you can see in this transaction, there is one ETH, and one ETH equals 398 USDC. USDC is a stablecoin. And it basically just, you're allowed to, using this application online from anywhere, you basically swap from one token to the next. These tokens are, the USDC is a ERC20 token. And this would be considered a decentralized exchange. Portfolio management. I also threw some stuff up here. One thing that's interesting is one of the only disadvantages to the Ethereum blockchain right now that is out there is for every transaction that you do on a decentralized exchange, you pay what's called a gas fee. And that gas fee is actually paid for in GUI, which is a fractional portion of ETH. Which is like one ether is equivalent to, what is that, 1 billion GUI. And just to give a representation, back in March, I was only paying 4 GUI. And because of the craziness in the market right now, the GUI cost is up to 162. So on average, I was paying $3 or $4 per transaction back in March, and now you're paying $15 to $30 per transaction in March. Why would people pay that much? Well, you have people that are making thousands of dollars on these. I know a guy that's made 6 figures doing this stuff, and he has no problem blinking an eye and paying $200 in transaction fees when he's making $10,000 or $20,000. So it's interesting stuff. This is also right here is a decentralized, on the bottom right is a decentralized portfolio. This is just one of my portfolios there here, and it shows that I've had a 16% gain in the last day, and I've made $420 on the 3,000 whatever. But this is a way to track your cryptocurrencies, all these digital assets basically. ERC20 tokens. These are some more examples of ERC20 tokens and what they're used for. Synthetic network token is actually for creating synthetic assets on that exchange. You have ZRX, which is a protocol, basically which helps support the back end of things that are being done. You have Chainlink, which has been getting a lot of buzz, which is a pricing article. So when you have these things out there in the market that's trading, you have to have something that validates what the prices of things are, and so Oracle does that basically. And Oracle does that; it validates what the price should be for something. Then you have Argon, which is an example of a governance token, and then you have USDC, which is a stable coin. USDC as a stable coin is a coin that is literally backed by dollars. So every dollar into it is also equal to a dollar, and you can basically swap it in and out. And then there are what are called ERC 721. Somebody else has a mic open, I think. Just as a heads up, you can turn off your mic if you have somebody else has a mic on. Then there are ERC 720. Then there are ERC 721s, which is I'm showing a picture right here of a virtual piece of property. This is a if you're familiar with what VR is, like wearing a pair of VR goggles and being in a virtual reality, this is actually a property in VR, and that property actually went for about $500 or $600. It was I bought one similar. Actually, I bought that one for 2.79 ETH at the time. ETH was trading for I think like $180 in ETH, so it cost me about $400 or $500. Why would I do that? Speculation partially, but also for advertising purposes, and I'll show you that in a minute. And Decentraland is actually a game currency. Mana is a game currency to also participate in a virtual land where you can own virtual space, and people are actually advertising this. So why would I do that? In the bottom left, you can see that little VR. Those are buildings in this VR space. On the left is a billboard I did for my local Bitcoin meetup group. So we're advertised in a virtual space for other crypto people to see. In the upper left are other digital assets that are considered NFTs. The bottom three are pieces of artwork that were purchased. The middle one was actually, those are called CryptoKitties, and it actually almost crashed the network when they were first launched, and it has been one of the, is actually one of the first NFTs that came about, and it has some popularity because of that. And then you top are actually some clothing for characters. Some other things that are interesting is smart contracts that we've seen. allow things that what you see on the right. This is called compound.finance. It's a website, and it allows people to basically deposit their cryptocurrency, earn interest, and actually borrow against their collateral. And this is all on a smart contract on a blockchain. So everything that's done here is done with that. Who owns it? Technically, it's owned by the users. Right now, those using the platform actually get rewarded in what's called comp token, which actually goes towards voting on the platform. There is a company that's obviously managing host who has a large majority of the tokens, along with some seed investors, and they put most of the proposals out there. But you can actually participate in the voting of things. As you can see right now, DAI on here is returning. At the time I did the screenshot, DAI was returning 7.48 APY. No, it was returning. 3.13. It had gone up. I don't know what the 7.48 is. That might have been an increase in the total supply. Okay, that was a deposit. Sorry about that. So the interest, the APY on DAI, which is a stable coin, is paying out 3.13. USDC at the time was paying out 2.34. As most of you are probably aware, that's better than your bank is offering for your dollars. And this is part of the reason why a lot of people going into cryptocurrency and buying such things as USDC, because they can actually get a higher interest. You can actually collect interest. On your USDC on Coinbase as well. Just so I can be upfront, on Coinbase, if you were to deposit USDC on Coinbase right now, you would actually be collecting 0.15%. Still slightly better than the banks. Not too bad. Not too much. Unfortunately, using comp right now has gotten really expensive because of the gas price. Like I was saying earlier, you pay a GUI, you pay a gas price to do transactions. So because this is decentralized, you would be depositing and having to pay a gas fee, which is kind of offsets the purpose of the interest. Things should slow down, and Ethereum is actually over the next year planning to go to Ethereum 2.0, and that should hopefully alleviate a lot of the gas issues that we're currently seeing in decentralized markets. All right, real estate, title, escrow. How is this? This company named T0. I don't know if anybody pays attention to the stock market. Overstock about a year ago was about $8.50. Now it's at about $95. They are a big owner in T0. Overstock actually has a big investment in cryptocurrencies, and they're planning to put $300 million in real estate onto the Tezos blockchain, which is another blockchain, one of the very many blockchains. Deloitte also has blockchain in commercial real estate as the future is here. People are starting to tokenize real estate transactions, and I will show you some more of that. On the right is Realty. Now, because of regulation in the United States, they can't sell it here. But what they do is people from out of the country are actually able to buy United States real estate. What they do is they buy the real estate, they tokenize it, and they sell tokenized interest out to other party members. And basically, because of regulation, they can't do that in the United States, like I said. So they sell to people in like the UK. They have to have an address that's whitelisted. They whitelist address, and then they can invest in this and actually make a return based off of those investments. We're hoping that some of the laws ease up in the United States and we kind of get on the right track because we're behind a lot of other countries. Tokenized real estate, interest in real estate is being tokenized, as I said, and sold out of the United States. And then Addy is another company. This is actually out of the Bay Area, and they're doing similar things, I think, tokenizing of commercial real estate. It's also moving to mortgage qualifications. They can't offer a mortgage yet, but basically this is a decentralized mortgage application that is helping to pre-qualify people and basically using blockchain technology to do it. Blockchain is also being used to automate tasks. I saw this I saw somebody giving a presentation earlier this week, and this is the company they're associated with. And so basically this is a company out of the Bay Area, and it's basically a blockchain solution to help automate tasks for real estate. And that's and then escrows. This is a company that handles escrows. As far as I can tell, nobody's really done a Bitcoin transaction directly for real estate. Typically, what they do is they put it onto a kind of like a debit card, or they sell it into fiat and then pay for the real estate transaction. But they do have crypto escrows. Basically, it acts as a third-party intermediary. And so I see it going this direction. The future of escrow will likely be an interaction with an automated third-party contract. It will probably be most likely decentralized. So you'll be working with some decentralized contract on the web, and then basically once both parties agree, there might be a third party might execute the transaction. Only time will tell. It won't be far away from us to start seeing everything go towards a blockchain of some type, or have more than likely though. We won't know there's blockchain there. It's the blockchain in the background, and basically we'll be just running some application through an app, and it'll be riding on top of blockchain. It's often been said blockchain is like the internet. If you remember back in the days of being on the internet, we all used to go through modems, used to hear the phone line, it used to go through an analog line, but now technology actually all rides on top of a digital line. So we had this flip in technology. Same thing with our banking industry. Banking industry is really old and slow. More than likely, the banking industry is going to flip-flop and end up being on top of the blockchain industry, based off of some of the decentralized banks that I was basically just showing you a little bit ago with compound finance. USDC is one of the fastest growing stablecoins, reserve digital dollars. It's got 1.1 billion in circulation, and 74 billion has been transferred in chain. Now I'm showing down here. It's technically 0.999330, so it's almost a full dollar. And then what's interesting is if you start looking at market caps, when you look at when you're comparing the crypto industry, you have to really compare it. Nice, that's all that. When you're looking at the crypto industry, you really have to compare it to other market caps. These numbers are probably a little bit dated because I'm sure Apple's probably gone back up over. I think they hit 2 trillion. But anyways, this kind of shows a perspective of some of the different sizes of how much capital is in there. Bitcoin only has 209 billion at the time I wrote this, where Apple is actually 2 trillion now, I think. The total gold market is 11.6 trillion at the time I made this, and so it kind of puts a perspective of how small the Bitcoin market actually is. What's interesting is out of 328 million in 2019, approximately 12% of that population had owned gold, which was approximately a little over 39 million. If only those people that held gold, the 12% held gold, each one could only have 0.53 of a Bitcoin. This assumes the rest of the world had none, and that none were ever lost. During the early days of Bitcoin, actually about 2 to 3 million were lost. So technically there's only about 18 million. Out of all the Bitcoin that have ever been mined, 18 million have been mined so far. There's about 3 million left to be mined. Simply stated, there's just not enough to go around. There was an article that said if you own 0.28 Bitcoin, BTC, you're statistically guaranteed to be the richest 1% of the world in terms of BTC. So, and I can provide information if anybody wants further. No, I didn't delete that one. I don't know why it's stopping. Okay, hold on. Apparently that wants to play without me. Okay, I apologize. Let me see. I don't know why that one's going on right now. Did that stop?
David, I can't hear it.
You can't hear it?
No.
Okay. Only I can hear it? Good. Then I can ignore it. So this is my DeFi roadmap. And I've made this based off of over 6 months of playing in crypto. The left really isn't as significant. Basically, I put a Chrome browser or Brave because it's usually easier to work with a browser and a lot of this stuff. I don't like using my phone. Plus, anytime if you lose your phone and everything's on your phone, then you're kind of out of luck. Brave is an interesting browser. It's a kind of it's a copy kind of Chrome. It was modified, and Brave will actually allow you to earn a token called BAT for viewing advertisement, and BAT is a cryptocurrency. A little note in here, 2019, there was approximately 18.6 million millionaires in the U.S. So I asked the question, what if you could be one of 1 million people? That'd be pretty big to be one of 1 million people. You know, a million is really not a big number when you look at the scheme of how many people there are. So I actually have a portfolio strategy that I work towards, and that is I select what coins I want to purchase, and I work towards being one of a million. So, for example, on Bitcoin, you'd say, there's 21 million Bitcoin. If you held 21 Bitcoin, you would be 1 in 1 million. Bitcoin's probably a little expensive to do that on, considering it's 11,000, over 11,000 now. So typically what you do to get started in cryptocurrency is you're going to go to your bank and you'll typically do an ACH or a wire transfer into either one of the exchanges out there, a centralized exchange. I have on here Binance US or Coinbase. You can go to a Bitcoin ATM and purchase your Bitcoin through there. I haven't done that. These are financial institutions, so typically you have to do what's called KYC. If you have crypto already, you can open an account with like Kraken. You don't have to KYC, but the thing is anytime you go into a fiat currency like the dollar, and you have at least $3,000, they're going to want you to use usually KYC. Then from there, when I'm in Coinbase, typically what I'll do is I will go buy USDC, which is pegged to the dollar. Then I go into my Coinbase Pro app, and I actually go in there. And typically, when you first get started, they require you to wait 3 days to verify your account, verify the funds, make sure they transfer over. But once you've actually established your account, established your history, you then have a basis. And so, like, I actually keep money in my Coinbase account. And so, if I go there and I deposit, $1,000 or $100 into USDC and buy some USDC, I can actually go to my Coinbase Pro account and deposit that instantly and actually get instant credit for it because I already have a balance, and then go buy a cryptocurrency if something drops. I typically, for myself, I only buy cryptocurrency typically on drops, and then right now I don't really sell. I see it as there was recently a company that just bought $250 million of Bitcoin, and they said they saw it as a reserve. So I'm kind of in the same party in my perspectives. Some lingo, dApps is a decentralized application. ICOs is initial coin offering. I don't recommend jumping into a whole bunch of crypto coins until you actually have understandings of what they do, and basically understanding a little bit more of crypto, because there's so much. DAO, if you hear somebody say the word DAO, that's a decentralized autonomous organization. That's basically a governance token of people being able to vote on protocols. Blockchain, the design to be immutable, the list of records, which we mentioned earlier. Next slide. So there's a number of resources out there. CoinGecko and MarketCap will show you a large amount of the coins that are out there. Some examples are Bitcoin, USDC, Ethereum. Obviously, I always learn more about before asking. I've already told you some of the different types. One of the great things is once you've been on an exchange and you actually own your crypto, there's a phrase in crypto saying if it's not your keys, it's not your crypto. And so it's just like a bank. If you have your money in the bank, the government can actually literally pull your money out from the bank if they want it. Just like when in a crypto exchange, a centralized exchange, it's their crypto. They get hacked, the hacker got it, it's gone. That's why you have this little thing called Treasure. It's a hardware wallet. There's a couple different brands of them out there. We actually call these as cold wallets. So on an exchange, that might be considered a hot wallet, and it's centralized exchange. This hardware wallet would be considered a cold wallet. And what's cool is you can actually so on a hardware wallet, it stores what's called as a private key. And a private key is basically generated based off of a cryptographic hash of 12 words or 24 words. So you have 12 words, and as long as you know those 12 words, if your key breaks, you can go buy another one and reestablish those same 12 words to reestablish your private key on any other device. So you can restore your hardware. So you can take your crypto. So what happens is you have private keys and you have public keys. Public keys are how you do transactions. Somebody sends you crypto through a public key. You send your stuff through a public key. You do all your transactions through a public key. A private key is what allows you to control the public keys. And basically, your hardware wallet, all it stores is basically your private key. And it allows you to complete transactions on a decentralized network. such as compound.finance. So if I'm interacting with compound.finance, I'm usually using a hardware wallet. But if it breaks, as long as you know your 12 words, you can regenerate that private key on any hardware wallet. And it's cryptographically safe. Like I said, what's interesting is I have this thing called Etherscan. If you're doing Ethereum and you're doing Ethereum transactions, you can actually go on there and actually see all the transactions. So it's actually kind of nice. I would wish politicians would do this, because if politicians use crypto, we would actually be able to see where any money laundering happened or where any gifts were made from. They may not like that. There's been a lot of discussion in regards to that, because I don't think they like that aspect of it. As I did say, there is gas. And then I point to a couple different things on here. Idle, Idle Savings, Idle.finance is actually a savings app that actually can get you like 3% return with deposits. There's TokenSet. TokenSet will actually allow you deposit your tokens there, and it will actually allow you to. It'll actually automate or have somebody else basically balance between two different tokens. So if you're between something that's volatile versus something that's stable, it'll transfer in and out of that currency to, basically it's like a portfolio asset management. Then you have Aave and Compound. Aave and Compound both you can deposit and lend and actually borrow from your liquidity on there. Aave is actually talking about probably doing some type of mortgages in the next year, which will be interesting. There's a lot of people that have a lot of assets in crypto, and so there's actually a bank there's a person in Wyoming. There's a company called Avante, and Avante is actually working on getting their bank charter to be the first crypto bank in Wyoming and the first crypto bank in the United States. And that's actually in progress right now. We're going to probably see these things change because of that. Then there's those who like to buy lottery tickets. If you buy lottery tickets, you're throwing away your dollar. Instead, you could do what's called pool together, and pool together is what's called a lossless lottery. You deposit your dollar, and for every dollar you deposit, you actually get like one ticket in the pool. And if they pull your ticket, you get all the interest that's been collected in that time period for the week. And then if you're done and you don't want to be part of it, you can pull your money back out. Granted, like I said, all of this takes gas right now, and gas is really high, so kind of expensive. But cool idea. Then there's OpenSea. I was talking about digital assets and stuff like that. OpenSea is a platform that allows you to sell your digital assets. And in the upper right, I have Uniswap and 1inch, which are both decentralized exchanges, and then Zerion for your portfolio management. Of course, then there's the last part where everybody's all like, well, how do I use it? There is crypto.com and BitPay and Cash App. BitPay and Cash App will allow you to actually transfer over your Bitcoin or your Bitcoin Cash or Ethereum, some of them, and actually allow you to spend it. So you actually can use this. And BitPay is basically, you can get a BitPay card, which is kind of like a debit card. It's you're basically spending your collateral like you would a debit card, but it's all in cryptocurrency. And we're going to see more and more of this. As I said, the IRS considers it property, but the federal courts consider it currency, and we're still waiting on that. And that is pretty much it. I think that's the last slide. So if there are any questions, I'm happy to try to answer them. And hopefully somebody got something, and you're always welcome to call me and ask me more questions later.